It's an early start loading iron ore onto the ship Beneus in the West Australian port of Geraldton. Cargo moves through here 24 hours a day to keep up with demand. Chinese steel mills are the main destination for Australian iron ore. Mining has translated into big business for this small town.
Well, we're hoping that this financial year we'll do 8 million tonnes. 4.5 million of that will be iron ore. For what the region was to what the region is now, it's fantastic. In the last 5 years, our trade's actually quadrupled.
With Asia leading the world's economic recovery, plans are underway to build a new deepwater port by 2012.
We're at the heart of a very rich mining province that's got an immense wealth of resources. Iron ore is just but one of those. We're going to have a new port here that's of international scale and effectively become Australia's door, not only to Asia and China and India, but the Middle East and Africa.
Demand is increasing so quickly in China, India, Singapore and South Korea that Australia once again risks being caught in a resources-fuelled bubble, which can just as soon burst if commodity prices drop. It's a situation the rural township of Boddington, further south in Western Australia, knows all too well. Locals have long been riding the roller coaster of mining booms and busts, thanks to the gold mine nearby.
We've seen the highs and the lows. It originally closed down or went into care and maintenance in 2001. The announcement for the expansion was made in February 06. So from 06 through till near the end of 09, it sort of just ramped up.
With gold prices continuing to nudge record highs, the pit is once again a hive of activity. At full production, this will become the Southern Hemisphere's largest gold mine, producing around 1 million ounces a year.
There's opportunities in the town, but the town hasn't exploded like everyone else thought it would.
Local contractors are welcoming the work for as long as it lasts.
The mining industry, it's a big thing, and yeah, for the state it is, and the town has benefited from it. But it's yeah, I mean, it's not boom town in Boddington; it's a boom mine.
Demand may be returning, but confidence, it seems, will take some time to rebuild. Aella, Callan, Al Jazeera, Western Australia.
Well, it was because of the continuing demand from China, largely, that Australia's economy managed to fare better than most developed countries during last year's global financial crisis. And data released last week showed that Australia's trade deficit is narrowing sharply as exports continue to pick up. But it wasn't always industrial commodities that drove the economy. Back in the 19th century, it was mainly agriculture that was pushing Australia forward. The country was said to live off the sheep's back. Protectionist policies and government subsidies helped make Australia a major global food exporter by the early 20th century. But it was the discovery of gold in 1851 that kicked off the boom in mineral exploration and mining throughout the country. And by 2008, agriculture accounted for just 4% of Australia's economy. Industry dominated by mining exports made up nearly 27% of GDP. But just how sustainable is this current situation? Steve Keane is an Associate Professor of Economics and Finance at the University of Western Sydney, and he joins me now from Sydney. Steve, nice to have you with us again. Are the happy days here again for Australia?
I think you've mentioned that happy days in Australia tend to be rather cyclical, booms and busts, and I think this is actually the beginning of could be a very sharp and very sudden turnaround again, because a whole lot of factors that made us happy in the last year, I think, on the cusp of changing direction once more, including, of course, the level of Chinese demand.
Why do you think that?
Because China's dramatically expanded, courtesy of probably the biggest monetary stimulus we've seen in response to the global financial crisis, loans expanding by something like about 35% of GDP in 1 year, and that has, as we know, fueled a large property and also share bubble in China, which is already leading the Chinese authorities to be quite worried about the degree of wanton and wasteful speculation going on. And if anybody who knows anything about China knows it can turn on a dime when there's its decision made to change direction. But if they decide to suppress that bubble, then a large part of the demand that's sucking in Australian mineral exports may suddenly evaporate.
But the if in this case is the political will to turn it around. Now, China seems to be facing the situation that Washington was facing some 18 months ago. The question is, should it actually allow the economy to clear itself out, as a self-regulating mechanism should do, or will it continue to bail out the system in the hope that it can override what problems exist? Washington bailed out its banking sector. Why should we believe that Beijing won't continue to fund its economic growth out of the kind of borrowing that we're talking about?
I think actually China is probably more capable of being sensible capitalists than the Americans are. It's a very dangerous game to try to suppress the innate cyclical nature of the system, because as America found out to its great pain, if you have a long period of sustained stable growth in a system driven by debt finance, ultimately the bend you get to in the end is much more severe. Remember, we went from the Great Moderation just a couple of years ago to the Great Recession. Now they're talking about the Great Stimulus, and the economy still is far from getting out of the woods, as the most recent unemployment data in America showed. The Chinese may well be more capable of letting people suffer pain when they need to than the Americans have shown themselves to be.
So you think Beijing is actually going to start reining in its growth? And what impact will that have on the rest of the world if it does? Not just Australia, the rest of the world.
Well, that's where a large part of our commodity exports now, and the dramatic increase, a turnaround in the terms of trade, which was plunging for some time but is now rising, that may suddenly come to a halt and go in reverse. It is certainly a very volatile demand driven by, let's say, the biggest monetary stimulus possibly in history in one country. And when they decide that that's gone on too far and it's time to stop it, China is not particularly worried about the flow-on effects of it changing direction on other countries. America's learnt that a couple of times, and I think Australia may learn the lesson. Riding on the sheep's back is a lot more comfortable than riding on a Chinese back.
Let's just broaden it out for a second to the global picture. Steve, I know you're still concerned about the state of debt around the world and the balance of economic forces that are playing out. But just one thing I wanted to bring up was the number of people that seem to increasingly be talking about Japan as being the real worry here. The state of debt in Japan has reached, for some people, what are critical levels. Do you think we're going to see a crisis in Japan this year? And if so, what impact will it have?
Well, Japan has actually been following the same mistaken policies for 20 years that the American economy embarked upon one year ago, in trying basically to bail out zombie banks, keep them alive, and try to stimulate their way out of trouble by expanding government spending. I think Japan can continue making the same mistakes for a lot longer, because they actually have slightly reduced their level of private debt. Whereas America has gone a long way before it starts turning that around and is starting more encumbered with government debt than the Japanese were when they began their mistaken policies. I'm not so worried about Japan. I think we're more likely to find problems coming out in Europe, where, of course, you don't have central banks and you could be told to do the bidding of the governments and fund their deficits. So we're more likely to see unexpected fiscal explosions taking place in Europe than in Japan. Japan will continue doing this. What's going to be different about it for Japan this time round is that in the past 20 years, it can rely upon export demand for its product from the rest of the world. That reliance isn't going to be there. That's more likely to be more of a problem for them than the continuing mistake of trying to fiscally stimulate their way out without addressing their private debt levels.